Hey everyone, I'm Jeremy Szafron. This is Kitco News. Now, before we dive into today's discussion, don't forget to hit that subscribe button. On today's show, we're exploring some of the most pressing issues in the cryptocurrency world, from the impacts of the recent Bitcoin halving to the anticipated decisions on Ethereum ETFs, and of course, the significant mergers and acquisitions shaping the digital mining landscape. Now, Bitcoin is currently trading between $63,000 and $64,000, showing a robust year-to-year date increase. Of course, that's about 50% year-to-date. Meanwhile, the Ethereum community is on edge awaiting regulatory decisions. Investors continue to be looking for opportunities here. Now, to help us unpack all of this, we're joined by Taras Kulyk. He's the founder and CEO of SunnySide Digital. Prior to founding SunnySide, Taras was the SVP of Growth at Core Scientific, the largest public Bitcoin miner at the time. There he originated several $1 billion in total contract value and witnessed firsthand the transformative trends in digital mining. My friend, thanks for joining us today.
Thanks for having me.
Yeah, I appreciate this. Taras, as we just kind of talked about, it's been quite the year for Bitcoin. Obviously, we saw that remarkable surge in value, as we mentioned, reflecting a significant year-to-date increase of over 50%. Now, this impressive growth has been largely driven by the anticipation and the aftermath of the Bitcoin halving event in April. Of course, we had spot Bitcoin ETFs being approved. And I'm just kind of curious here. The market's response has been so robust, with institutional and retail interest peaking. Of course, there's economic, factors such as inflation concerns, shift in monetary policy. Obviously, we've seen a lot of people buying gold, buying Bitcoin. Taras, where are we this year in the Bitcoin world? I mean, it's been quite the year.
Well, I think we're still in check to see some volatility that's going to be coming down the pipe. Right now, I think investors globally are really looking for a flight to safety, which is why, as you mentioned, astutely, gold has seen an uptick. A lot of the traditional staple companies have seen upticks. Cash flow generation has become a major trend for a lot of value investors. And candidly, Bitcoin, now that it's been de-risked through the, so to speak, regulatory hula hoops that it's jumped through with the ETFs and ETPs launching globally, a lot of longer-term investors are looking at Bitcoin as a stable asset to park capital. Even though we see volatility coming up within the pricing, it's nowhere near what it used to be. I mean, before we would see 20, 30% candles and no one would blink. Now we have, a 2% correction and everyone's screaming bloody murder and the wall's going to fall down again. I mean, it's a completely different ecosystem, right? At this point, we've got almost $1.5 trillion or dollars of value parked in Bitcoin. And that is not going to get smaller at this point. I mean, even I think Peter Schiff has said that Bitcoin's not going to zero. He's saying it's only going to 20,000 now. That's a huge change of tone from what he was saying about a year ago, where he was calling it rat poison squared in the vein of Charlie Munger, right?
Right. Okay, well, let's talk about your price predictions. And I mean, we're sitting here watching, as you mentioned, we saw that correction. A healthy profit taking took place. Of course, we saw some of the Bitcoin going into other folks' hands. What's your prediction for the future price movements in the context of, the recent halving event back in April? Has anything surprised you here?
Well, it surprised me that it's come off as sharply as it did post-halving. However, it didn't surprise me that much because we've actually seen quite a bit of buying from some of the larger accounts in the ecosystem. I mean, you keep seeing the memes online about the whales eating up the guppies in the ocean. I think that's going to continue happening, where the steady, smart, sophisticated investors are buying BTC commodity spot at what is likely a discount to what the fair market value should be, which I think right now should be around 70 grand based on the total macro ecosystem of what is going on right now. And as I mentioned before, I think by end of year, we should see between 100,000, 120,000 per BTC. And that's really a conservative estimate that I'm able to put, my reputation on the line at this point, saying that that's where I personally think BTC will be in a very conservative case.
Okay, well, give me a little bit about what the lay of the land of what that looks like in terms of, obviously we have the Ethereum ETFs looking at some approval processes here. I mean, when Bitcoin spot ETFs were approved, the market saw a significant increase in both price and institutional adoption of Bitcoin. Is it going to be similar? I mean, we got so much excitement here. And as you said, there was almost more smoke than fire when it came to halving. It's a more stable environment, more mature.
Yeah, so Ethereum still has quite a few regulatory headwinds that it needs to overcome. There's a few different very serious lawsuits outstanding from some of the folks that work with the Ethereum founders, claiming that the courts and the SEC have it wrong, that the Ethereum network is actually a security type protocol. So once those headwinds subside, I think there will be a lot more uptick available for Ethereum as a asset for folks to park capital into. One of the things that may have been actually taking some of the wind out of the sail of Ethereum as an asset is really the innovation that's been happening on the Bitcoin protocol. You may have heard of ordinals or ruins or BRC20. This is allowing developers to build applications on top of Bitcoin as a smart contract platform. This is extremely new and innovative technological update for Bitcoin as a protocol. And it takes a lot of the question for developers as, am I building on a stable protocol for the future? And with Bitcoin, with all the institutional adoption and acceptance, they're viewing it as the network to build on top of now, even though it's a little bit more clunky right now, not as smooth for application development, but we're getting there. We're getting the teams developing middleware to be able to have the application layer built on top for new and innovative use cases that will ultimately support Bitcoin even more into the future as it gets more and more scarce.
Okay, Taras, talk to me a little bit more about this new technology. I mean, we had somebody come on and explain ordinals. I still don't really get it. So what's the opportunity here?
Well, the opportunity is that ordinals provide a type of platform that we've come to know as NFT on Ethereum or Solana or some of these other protocols. An ordinal is a specifically identified Satoshi, which is the base layer of what a Bitcoin is comprised of, for you to be able to inscribe additional information, metadata, so to speak, that's ascribed that specific point of data on the Bitcoin blockchain. And with that point of data, you're able to ascribe any type of additional information to that, knowing that you're forever permanently, immutably ascribed onto Bitcoin. And so NFTs are basically a meme. The same type of meme can be ascribed onto a Satoshi based on the metadata associated with that specific Satoshi. So it allows you to have meme coins, the Pepe's, the Bored Ape type, or I guess pictography that's put onto Ethereum right onto Bitcoin itself. So
shiny,
that can be used for, yeah, shiny object, shiny newest, dog with hat kind of stuff. Which candidly for me, I'm a boring pickaxes and shovel kind of guy. But for the kids these days, I mean, they like to trade in all sorts of collectibles. I never liked baseball cards myself, but there's a market out there for baseball cards.
Yeah, and there seems to be an ROI for them too. I mean, investors are doing quite well in some of these areas, aren't they?
Yeah, some of them. I think longer term value will be held in being able to associate specific Satoshis with real world assets like real estate, art, estates, these type of things that have been historically difficult to track into long-term future. To be able to associate that with a specific ordinal or Satoshi, I think will have real-world applications that will be brought into the fold and day-to-day use for everybody, you and me, or grandparents or parents, for economic use.
Interesting. No, it's a fascinating world. I mean, okay, let's go back to Ethereum a little bit with the decision pending on several ETFs in that space. Can we expect a similar reaction if they are approved? I mean, you were talking about the headwinds. Give me a little bit of the worst case and the best case scenario here.
Well, I mean, candidly, the best case would probably be the same type of uptick that we saw on the Bitcoin side, where if there is a regulatory approval of an ETF or an ETP, we will see most likely a solid amount of interest coming in. On the contrary, if we do see a decline of the ability for an ETF or an ETP, we may see even more energy and value deflated out of the Ethereum network. Because there's always been this issue with centralization after proof of work was abandoned on Ethereum. Ethereum had a very large pre-mine, meaning that the founders actually created a lot of Ethereum for themselves before they released it to the public. And with the proof of stake consensus mechanism as uses right now, that means those founders who haven't sold a ton of their Ethereum stake still have the ability to control the network, which is the exact opposite of Bitcoin as a protocol. So these concerns are still weighing heavy, not just on investors or folks that are looking at it as an application or protocol, but the regulators especially.
Okay, talk to me a little bit about Bitcoin miners. I mean, obviously, this is a world that you live and breathe, and you're with it. I mean, post-halving, what's it been like? What's it been like on the miner side?
Well, it's been a wild ride. Immediately post-halving, we had the rune printing, rune as a protocol set up on top of Bitcoin. And what that led to was a major race to generate and create different rune protocols on top of Bitcoin. What that means is it actually increased the transaction fees that miners experienced and enjoyed, to the fact where we had some of the highest levels of economic reward and incentive to miners for the several days, almost a week and a half after the halving took place.
Wow.
Since then, we've actually seen the transaction fee value, absolute and relative, drop to where a lot of the conservative folks were expecting it to go, but not below, which is the most important part. Is a lot of the economic pain that has been felt by miners, no one's surprised by it. People have been preparing and contemplating this type of hash price for the last 2 years. And as I mentioned before in different podcasts, a lot of the pain and leverage has been taken out of this system. So a lot of miners are actually healthier now than they were 6 months, 9 months, 12 months ago, as we saw the string of insolvencies that happened at that time.
Yeah, and you'd think that they would keep happening. I mean, it's an interesting development. There's ongoing advancements in Bitcoin mining technology, particularly improvements in energy efficiency and processing power. Is this how these miners are staying together? I mean, how does the innovation affect profitability?
Well, you said it really well there, actually. Bitcoin mining has actually been increasing its efficiency and improving its productivity over the past, call it 8 years since it started. The thing is we've been catching up to existing silicon technology for that time. We are now at the point over the last, call it 8 to 12 months, where Bitcoin mining technology, or ASICs, application-specific integrated circuit technology, is now caught up to the most advanced silicon technology that's used by the likes of Apple, Samsung, Google, Microsoft. So we're now actually using 3 nanometer chips, meaning that the semiconductors on the actual chips themselves are infinitesimally smaller than they were when we originally started. And so we have been seeing these major leaps in efficiency up till now. However, now that we're actually hitting the wall of technological innovation, we're only going to see incremental increases in efficiency until we come up with a new type of semiconductor technology, because we're already at the very edge of it for the major manufacturers, in particular Bitmain Technologies.
Okay, so what does this mean for the miners? I mean, there's going to be a lot out there that gets swallowed up. Analysts predicting a significant increase in M&A activity within the space this year into next year. Obviously, this is efficiency and scale. What are you seeing here? Is it going to be a consolidation, or are companies just getting smarter and adapting different use cases going forward?
I think a little bit of A, a little bit of B. Right now, as we mentioned earlier, the sector is actually maturing quite rapidly. So generally, when a sector consolidates, putting on my B school hat, you usually see a lot of consolidation in the space. So larger players acquiring smaller players, cleaning out G&A to increase efficiency from a performance perspective and operations perspective. Or you see smaller guys merging with other smaller guys so that they can actually gain scale to be relevant to the market. The problem is as the market matures, the smaller folks won't have enough oxygen to breathe to be able to stay relevant. So we will see over the next 12 to 18 months more consolidation from a merger perspective, but certainly more acquisitions from an acquisition perspective. And the reason being is because the larger folks have been actually hitting the market with ATMs, at the money equity raises, and some of them have large chunks of capital that they're ready and actively looking to deploy for well-priced assets. You look at Marathon's been active, CleanSpark's been active, Riot's been active, Core Scientific, my former alma mater, is finally emerging from this Chapter 11, and they're likely going to be active in the near term because of the scale that they actually have on operations. Some of the newer folks like Iris, Cypher, etc., they're also likely looking for lower cost, likely distressed assets for some of the folks that aren't as bullish on the ecosystem and are looking to get an exit to a larger player.
Yeah.
The other side that you mentioned is diversification of revenue streams. We've seen a lot of folks in the Bitcoin mining environment start looking at AI and HPC. This isn't a trend. This is actually a fundamental shift in operations. And the reason being, it's not because they're wanting to apply Bitcoin mining to AI. It's because AI is actually getting more energy intensive and getting closer to Bitcoin mining than it has been historically. And the good thing is the Bitcoin miners and their technology teams and technicians are better versed at managing large scale power than the traditional HPC data center operators. And so there will be a natural fit for some, but not all, Bitcoin miners to be able to expand and grow into the HPC AI business.
Yeah. Do you see a lot of the miners just, basically redoing their business model and saying, okay, we're just going to supply this power to AI and tech. It's just going to be, more liquidity in the future, or it's a better runway for us, more opportunity? Or are they really into just sticking with inside of the crypto community?
That's a great question. That's more of like a religious question for a lot of these folks.
Yeah, well, exactly.
It is. It really is. Some are purists where they say, no, we are Bitcoin miners to the core. We are fundamentally going to be battling some of these HPC folks for the better power purchase agreements. And there's others that are a little bit more capitalistic, more mercenary as to how they view their business models. And they'll say, hey, it's wherever the best IRR fits into our overall business model, regardless of where we view Bitcoin or HPC generally as independent segments of the economy. So it's really based on the management team, and you have to do your own research as to what the management team has been pushing into the market. There's some well-known examples like Iris Energy. They just put out a release as to their operational update, that they're very keen on having a dual-headed strategy between Bitcoin mining as well as HPC and AI, and they've got a fantastic team that's going to help them do so. Core Scientific, again, my alma mater, announced a $100 million HPC hosting contract because they have the experience and expertise in-house to manage HPC and AI compute within their infrastructure. So I think it really is based on the management team, and investors need to do their research as to what that management team has put out based on the approval from their board of directors.
Right. And it does sound like that some of the larger guys, at least on the scale side, might be in this one to win it. I mean, is that what I'm hearing? We've seen this consolidation take place in other sectors, but when that happens, investors usually have an opportunity to make some good ROI. Is this where it is?
Amen. And I think right now the Bitcoin mining public companies are deeply discounted to where they likely will be if a bull run does start. We've seen a few companies really uptick on their valuation. Bitfarms, CleanSpark, for example, have really had pretty strong runs over the little while. Unfortunately, my alma mater, back to core, is still a lagger when it comes to multiples versus the other companies in the public markets. I think they'll probably see a larger uptick, and I'm very supportive, and I'm not giving investment advice, but I'm a big fan of core, and it's actually in my personal portfolio. But I also do think that investors looking at this space could see potentially a very strong uptick in multiple expansion as the market picks up, and likely BTC starts running post-halving as it has done historically over the past 4 or 5 cycles.
Nice. Well said. And where's that BTC price going one more time, Taras?
I would still say between 100 to 125 by the end of the year. And that's likely in a conservative case. I mean, again, you go back to the historical precedents and it's a multiple of that. But I'm trying to, hedge my bet, so to speak, on BTC pricing.
Yeah.
I wish I had a crystal ball. I just know that it's a stable industry with some very strong people in it, and really proud to be part of it.
Nice. Yeah, a lot of people shopping for those discounted prices on the evaluation side, too. Taras Kulyk, thanks again for coming on, founder and CEO of SunnySide Digital, joining us today. Thanks, man. I look forward to talking to you again soon.
Hugely. Thanks, guys.
Appreciate it. I'm Jeremy Szafron for all of us here at Kitco News. Thanks for tuning in. Don't forget to subscribe, share our channel, and we'll see you next time.